Welcome to another AriasWave XLM price action update. So, since the last update, which was not yesterday, the day before, we have basically been looking at what could be a bottom. Okay. Now, I say that very carefully because, as I mentioned previously, we've had Bitcoin still needed to make another low. And as you know, it went to about 20,000, just shy of the 2017 highs, which, all the media outlets are saying if it falls $87 more, then this could be the end for Bitcoin. Utter nonsense. Media talks BS constantly talking up and talking down everything in a nonsensical way, just so you basically make the wrong decision. So, look, I'll tell you, this pattern has been a bit strange. The D and E are quite small, but it wouldn't be the first time I've seen this little mound type scenario at the bottom of, corrections. And I've always, wondered why. And obviously I discovered why after a while. But these little type of moves at the bottom of corrections used to always stump the hell out of me. Used to wonder why. Why do they even happen? What is that? So at the moment, you've probably become a bit more aware since I've been covering this that a certain amount of patterns need to occur in order for a correction to be deemed complete, right? Now, whether those patterns make sense immediately or need alteration, well, if you have a look at my program, my book, whatever, you'll notice that I have very basic diagrams of what these patterns look like. But the truth is, they can manifest themselves in many different shapes and forms. However, the same principles still apply to every single wave within the correction. Right? It's up to you and your very sharp eagle eye to try and determine which one is out of place. Right? Have you ever played spot the difference? A lot of people play that as a kid, where you got to spot the difference between this picture and that picture. Well, it's pretty much that type of thing, right? You've just got to figure out what's the difference between the real pattern, as in what always happens, versus the pattern I'm seeing on the screen on a particular chart, right? So at this point in time, I can say that we still need to see a break above that magenta line at 15 cents to confirm that this count is mostly accurate, right? Uh, to say the least. So, last time when I actually said that this is an E wave, potentially we've hit that low, I had my wave V in there. Okay, I put the E there later, but now I've got the wave 2 here. Okay, the wave 2, when I put the wave 2 there, that means correction is over. Now, it might be a bit early for that, but if anything falls any more than it has already, then things aren't going to be good anyway. So this is more than likely the scenario here. This is likely the case. All right. So why am I saying that? Okay, so if we go to the US 30 Dow Jones, right? I told you if we break that red line, there'll be trouble, right? Because it's part of a 1-2-1-2 pattern. Okay? Right? 1 2 to the end of 2 being the red line, and then a really deep retracement for the next 1-2. And we have not seen a break of the red line, despite all the FUD, despite everything that you've heard in the media. We have not broken that red line. We haven't. So there's no reason for me to think that the bottom isn't in. Okay. If it would have gone really close to it or just broke through it, well, forget about it. I'd have to think about this all over again and think about where did I go wrong? Which wave did I, you know, incorrectly identify as being the labeled wave, right? Because nobody's perfect, right? AriasWave is a methodology, it's a systematic approach to identifying waves. But you, as the analyst, can definitely get it wrong, right? So you're just listening to somebody who not only created AriasWave, but has also tried to put it into practice, right? And putting it into practice is not easy, right? Misidentification of waves does happen, even to me, right? Because it's every wave is different, right? It looks different. It still has the same properties. The internals are still there, but they always manifest themselves differently, as I keep saying, because it's a very important point, right? So, I mean, it's mainly to address those people who say, "Oh, you said XLM's going to 160 about a year ago." Yeah, maybe at that time it looked like potentially that was the count. But then, why do we have updates at all? Maybe I should have just said that thing, thought I was wrong, and then quit the whole game. But no, I bring out updates when I feel they're necessary to correct my misidentification of the waves because they're not easy to identify. Okay, that's the key component here, right? Otherwise, you'd never have a video titled "Update." It'd just be titled "I was wrong last time. Here, let me try again." Okay, I mean, isn't that what everybody does on TradingView anyway? Like, is everybody always 100% right? I mean, just think about that logic in your head, and then you try to put yourself in my shoes, and then you try to do what I do. Yeah, let's see how well you do it. In fact, why don't you go and make your own channel, and then whenever you have a better idea, link it to yours and see how we go. Maybe we could become friends. Maybe we can critique our work, right? And in a constructive manner, right? Not in a trolly, judgmental kind of way. That's stupid, right? That makes no sense. It's not constructive. We're all trying to reach a goal here, and that's making money, right? If you're not here to learn and to make money, then go somewhere else, right? It's as simple as that. So in saying that, going to Bitcoin, right? We didn't quite touch the magenta line, which simply means the previous D wave, and I do believe it was a D wave. As crazy as this may seem to a lot of people out there, I do believe that this one bottomed earlier, right? So I do believe, I don't think this is a zigzag. I do think that potentially it's a very kind of strange wave E, right? The 2017 high down to 2018. And then that is the beginning of a new bull market. So we have a 1-2-1-2 pattern. Okay. The first wave didn't make it above the D, right? The start of E, the end of D. So we had a 1 and 2, and then wave one of wave three, which is coming. Don't worry, Bitcoin's going to go up. It's going to go up in a big way. Okay. So don't stress on that, right? But a lot of the time you'll see that you get a pullback to retest the break of that high, especially if it's the start of an E wave, because E waves are typically the end of a particular trend. Corrective portion of a wave component is the proper way to say it according to AriasWave. So this technically is a B wave, right? Because we're looking at a very similar approach as to what the Dow Jones is doing. So we're looking at this being a B wave. So this is the start of a C wave. It's going to be a massive 5 wave move to the top until we hit the very end. Okay. According to the analysis on the Dow Jones, which is why I keep referring people back to that video that's titled "This Changes Everything," because this does change everything. It literally opens the door for all good cryptos to get to a level playing field. I don't know if you've ever heard that term before, but it's thrown around like crazy in the crypto world, especially among the top, you know, representatives of each a lot of these different companies and even elites. They use that term, a level playing field. You see, at the moment, we've just got prices all over the place. But eventually, we're going to get to this point in time where a lot of these coins are going to be valued highly relative to each other. There'll be, there'll be some difference, but I wouldn't say they're not going to be anywhere near where they are now, right? Because the coming move is going to blow everything out of the water. Inflation is going to pick up, and markets still do rise during high interest rate environments. Right? They just do. Okay. If you don't believe me, look what happened in the 40s to the 80s. What happened to the Dow Jones between the 40s and the 80s? It went up. So did interest rates. Okay. Do your homework. Do your research. Right. Just in case you think that high interest rates will crash everything. Right. That's what they want you to think. That's what the media keeps pumping out on the news, in the newspaper, everywhere, right? They want you to be scared so they can just buy the dip, and eventually they want to own everything, and you'll own nothing and you'll be happy, right? Those are not my words. Just listen to Klaus Schwab from the World Economic Forum. He'll tell you all about it. Apparently, you'll be happy. How about that? Right? Now, in order to avoid all that BS, why don't you just take control of your financial future and start getting with the program, right? Start understanding why all this stuff is happening, right? Right now, this is not a bear market. This is simply put a retest. Yes, Bitcoin is volatile. Yes, it's dropped 70%. Yeah. Oh yeah, 70%. That's a lot, right? Yeah. How about all the millions of percent Bitcoin has gone up since day one? Oh, we don't worry about that. That's not important. You know what I mean? Like, people care a lot about what they lose, right? But when they're making money, they don't really complain about that, do they? Right? And as Martin Armstrong says, which I really like this quote, all right, markets tend to correct or fall when there's, simply put, all the people who were going to buy have bought. There's no more. So it's like keeping your arm up in the air, right? How long can you keep your arm up in the air, right? As long as you've got that strength, in other words, buyers, right? You're all good. It'll keep going up. You can keep holding it high. But what happens when you run out of energy, or there's no more buyers? Well, it falls down, right? Because that's it, right? It's not because of computer trading. It's not because of um, short sellers or big whales dumping, and no, it's not that, right? That's why during the long term these markets keep going up and up and up, right? The Dow Jones, up and up and up, right? It's because people like to invest money, and they also like to hedge against depreciation of fiat currencies. Simply put, that's the best way to explain it, right? So at the moment, because of the increased money supply and lack of what confidence, especially in government, sure, you're going to see cryptos pump, and they should pump, and the volatility should be extreme um, because governments are extreme, because money printing is extreme, because they're robbing you from, they're robbing you blind. You know, the hidden tax is inflation. How do you mitigate that? Well, you buy some assets that are worth buying. Okay, not Luna, right? Or at least not the classic Luna. Try to you know try to think about those coins that, they're trying to work with the system, not against it. In my opinion, that's the type of thing that you should be doing, right? Not trying to dodge the system, right? Because the system will eventually catch up with you in one way or another. If you think none of this stuff's trackable, think again. Do you really want to be living in that world, living your life that way? It's ridiculous, right? Just do better than what you did 10 years ago, or improve yourself every year, and you'll be doing better, right? Don't compare yourself to others, because that's pointless. All right, there is no point comparing yourself to others. We're all living a different journey on a different path. So forget about all that. Okay, start from scratch if you have to. Put whatever you've got aside and start again. See if you can do it, right? It's all about your mindset. It's all about what's upstairs, right? Now, this applies to everything. This applies to not only XLM, Bitcoin. It applies to all good projects that aren't about to bloody collapse and go to zero. And usually they do is because there's something dodgy going on, and those ones should get flushed out anyway. I'm sorry if you're a part of one of those projects that happen to just die, right? I don't think XLM's one of them. I don't really think XRP is one of them. In fact, all the ones that are trying to achieve the ISO certification, Algorand, XDC, you know, XRP, XLM. I mean, there's probably more out there, but the ones that are really trying to play by the rules, those are the ones you should probably focus on, because this move that's coming is going to benefit everything. But you just want to be on the safe side, right? You want to be on the safe side and just be putting your money where it's going to grow. Don't get impatient, right? Dollar cost average is safe, no problem. But this is fairly straightforward. This pattern, right? This update is mainly just to talk about stuff that's other than the price action, because you already know what it's going to do, right? You already know what it's going to do, right? This is a wave one. This is a wave two, right? I've explained to you all the internals. We need to see a break above 15 cents to confirm, but we need to see now we can expect a wave three to the upside, right? Wave three, a big wave three up, right? We're going to eventually get to the point where we're going to have a wave one of wave three, which I tend to color as green, right? So yes, there will be a point where we will get a 1-2-1-2 pattern. Okay, so you could almost look at it as like zigzaggy type, right? Like you're trading a zigzag type move, like so, like this, because it's a 1-2 and then 1-2. Now, typically wave two is not as deep as the first wave two, but I don't know. Don't quote me on that, because of the Dow Jones chart. Wave two didn't expand to the upside, so don't take that literally, because you just never know. Okay, sometimes alternation does occur, but sometimes it could be just as bad, right? And it could be to confuse you. It could be just market forces. The alternation might be skewed to the upside, right? You could get two deep corrections here, and then once you get to the end of wave three, you'll get expanded corrections to the upside for fours and fives and fours and fives, right? That's why sometimes you see waves go straight up. They just go straight up and then straight down. Like, it's just crazy. It's like a blow off top. So I suppose in a way, like a lot of the times you notice that you know uh, the starts of moves can sometimes take a while. As I've mentioned before, the example of uh, the Dow Jones back in when the 1987 crash happened, right? You saw the 1987 crash, and then you just have this choppiness, right? It's very choppy. But then you hit to a certain point and this thing just goes straight up, right? Straight up. All you got to do is count the waves along the way, measure distances. See, waves are easier. Well, should be technically, but counting the waves along the way, knowing what you're doing, knowing where you're going, how you're going to get there, not chickening out, not cashing out halfway and losing a whole bunch of profits. Impatience will kill you. They'll kill your profits. Uh, you'll kick yourself. You don't want that, right? You know, at the moment, we've still got a while to go here. So, whilst we're seeing an expanded wave two there, deep one there, we could see an expanded last or you know Anyway, I've said enough. I'm running out of time. I'll talk